Let's pick up on where the Aussie dollar has been heading. I want to start off with this chart, 46.39. We've been talking about the fact that essentially the strength in the dollar, the weakness in the greenback has kind of provided a de facto tightening effect when it comes to exactly what the RBA doesn't want. You guys actually have an earlier than consensus expectation as to when tightening or normalisation is going to start. I mean, why? Why would you hold that view?
Actually, part of the reason the Aussie dollar is so strong is, as you mentioned, is very much a factor to do with a weak US dollar. But also remember that China is doing well. That we were seeing that upgrade on growth forecast. Commodities is doing very well.
Iron ore is defying, you know.
Absolutely. So that's coming in. I expect that would definitely be a part of the speech today. That you've got much stronger global conditions. You saw IFO conditions stronger overnight. You're seeing other central banks normalise around the world. Now, the RBA is going to be slower and later, and they're not going to get rates up very much. We just took the view that at some point there's going to be an argument to unwind maybe just a couple of those rate cuts that we saw in 2016. That would still leave policy relatively accommodative to support the economic growth, but also seeing better economic data in Australia on retail sales, particularly on the labour market, and that'll be the focus today as well. We've seen full-time jobs strengthening. New South Wales is doing particularly well. There's a different experience across the country, but we see stronger than expected growth next year. And eventually, if all these other central banks normalise and we see continued Fed tightening, then we think the RBA can follow with a modest unwinding of accommodation, not a tightening.
It was really that combination of that Ripper jobs report along with these comments, which may have been misconstrued about the neutral cash rate in the minutes that sent these Aussie bulls on a tear again. Where do you see the Aussie dollar going, and do you see more jawboning from the RBA?
Yes, I'd expect there to be. I mean, just in terms of that neutral discussion, I don't think that was of no significance. I think there's a reason that they discussed that. I think the board wanted to get some idea of just how stimulative policy is at this point in time. If the Aussie breaks above 80 on stronger numbers today, and he is upbeat in his speech, we don't think that's going to be sustained. We see a stronger US dollar, and you saw that last night when US yields rose, the US dollar rose with it. So we're seeing higher US yields, and maybe the Aussie dollar falling back towards the low 70s towards the end of the year.
I mean, what we saw last night was really kind of a global chorus when it comes to every 10-year across the board. You know, German bunds, we had the German business confidence coming through as well, French, the UK gilts, all kind of rallying. I mean, is this really... If you see a stronger US dollar, is it really more on the back of global positivity? Because it doesn't really feel like, you know, yes, transitory inflation, how long is that going to hold out for before you just say it's not there?
Yes, I think that the US dollar will be able to strengthen overall just because the US economy is doing reasonably well. It's just that inflation component that hasn't come through at this point in time. So we will see a stronger US dollar, but we're also going to see some stronger currencies elsewhere. And that ultimately for Australia means a lower trade-weighted index. And that's, I think, at the end of the day, the RBA really wants to see a weaker currency, then it can follow this normalisation next year.